Hi guys, it's Ian from E2A Educate to Accumulate. It is Friday, the 11th of March 2022. It's 10 o'clock in the morning in the UK. So yesterday we spoke about the euro. Today the focus is going to be on the Australian dollar. Let's have a quick recap on what we spoke about. So this was a 5-wave count to the upside. This is the euro single currency basket. So this is something that we've developed. You can see there in the top right hand corner, it's different euro crosses overlaid on top of each other. It's an unweighted basket, and it gives us a bias for the single currency. So here we could see 5 waves to the upside. We've got our resistance level today located at 427, but yesterday it was slightly higher than that, and we were looking at selling into euro rallies. Obviously we had the ECB meeting and Lagarde presser afterwards that helped this trade idea, but going back to the euro crosses, so we've got a trading view set up here. I've got all the single currency baskets and all the single currency crosses here. So we went through all the different euro crosses. There was a few that we noted that were prime, that being EURCAD, and this was the chart that we were looking at. So again, the spike higher towards the resistance level, and then this move to the downside on that euro topping out. We had euro Swiss at 261.8% extension level, and again mirroring that move to the upside in euro, and that's moved to the downside. The rest of the crosses weren't really prime. You can see that we've got a dip lower in the euro yen, but it's moved again to the upside. Again, that's not on euro strength, that's more on yen weakness. So we have to pick our fights, if you like. So we're looking for a single currency to move lower or higher, and then we're looking for cross currencies that highlight a decent setup. So going back to the single currencies, and let's talk about the Aussie. The Aussie dollar, we have seen a move to the downside, but we do have some support this morning, or this afternoon it might be, located here. And the fact that we've stalled near this 61.8% fib level makes us believe that we're going to form this sort of pattern. So what we look for is we now look for a Aussie cross that's going to mirror that sort of price action. So we're looking for a dip to the downside to then buy either a completion of a pattern or the building of a pattern, but it needs to mirror this Aussie move. And if we go to the Aussie pairs, or the Aussie crosses I should say, let's work through. So the prime one I believe is going to be Aussie against the US dollar. Now if you want to get the exact entry level or the confirmation of the entry level, then you are going to have to join the Telegram group for live updates. The Telegram group, I'll leave the link in the narrative at the bottom of the YouTube video. So what we're looking for here is a move to the downside as that Australian dollar gets sold into this morning, and then we're going to be looking at buying a dip. The prime level to buy the dip is down here, but as we always say, the BC leg is the hardest leg to catch. So we're going to look at the Australian dollar, the single currency. When it hits that support level, we'll see if we get a reversal formation in this pattern to then take us to the upside. And of course, the target level is here, which is around about 73.99, 74 the figure, which is the confluence area, and also makes a Gartley pattern. So let's have a look at the other euro pairs or crosses, and here we're moving higher in euro against the Aussie, and again we might get a resistance zone up here, but it's not looking prime. Looking at the other time frames, it's just not the cross currency that we really want to be looking at. Same thing, sterling Aussie. Again, we might get a move higher in the Aussie and lower in sterling Aussie, but it's not prime. Again, Aussie Swiss not really showing much. Aussie yen is on an upward rally, so that will probably just be a continuation of the current trend. Aussie New Zealand, it does have scope in 2 time frames, so we could get down towards these levels. And again, remember, we want to get towards 88.6%. The reason that we want to get towards 88.6% is because then we know where our stops are. So when the Aussie moves to the downside, if we can get around these sort of levels, then we have a decent stop, a decent target around about 107.80. And then Aussie CAD, last but not least, there is potential here for buying into this dip around about 93.08, 93.03. So like just to highlight what we've been talking about, so euro, that train has left the station and is now moving to the downside. We're looking at buying into dips in the Aussie this morning. If you do like the videos, please join the YouTube channel. Hit a like, hit a dislike if you don't like it, and if you want to get more live updates, then please join the Telegram channel or look at the website, which is educatetoaccumulate.com, the two being in numerical. Okay, all the best, take care.